Did you know that Kuwait has the world's strongest currency, the Kuwaiti dinar? Quite a fascinating fact, isn't it? But what does it mean for a currency to be strong? And why isn't Kuwait, with its mighty dinar, the richest country in the world? Well, let's unpack this a bit. When we talk about the strength of a currency, we're usually referring to its value compared to other currencies. For instance, as of today, one Kuwaiti dinar is worth more than $1, €1, or £1 British. This means if you were to exchange your Kuwaiti dinar for any of these currencies, you'd get more of them in return. Sounds pretty good, right? However, a strong currency doesn't automatically make a country rich. There are several factors that contribute to the strength of a currency. These include economic stability, inflation rates, and interest rates. Economic stability is crucial. Countries with stable economies often have strong currencies because investors feel confident about the future. When investors are confident, they're more likely to invest in that country's currency, pushing its value up. Inflation rates also play a significant role. A country with low inflation will generally have a stronger currency than one with high inflation. This is because when inflation is low, the purchasing power of the currency is preserved, making it more valuable. Interest rates are yet another factor. When a country's central bank sets high interest rates, it often leads to a stronger currency. This is because high interest rates attract foreign investors looking for the best return on their money. Now let's circle back to our initial question. Why isn't Kuwait, the country with the world's strongest currency, also the richest country? It's a complex question with many layers, and it requires us to look beyond just the strength of a nation's currency. So, if Kuwait has the world's strongest currency, why isn't it the richest country? Let's delve deeper. To understand why Kuwait isn't the richest country, despite having the strongest currency, we first need to understand the difference between wealth and currency strength. Now, this might seem like splitting hairs, but stick with me for a moment, and I promise it'll all make sense. Let's start with wealth. When we talk about a country's wealth, we're usually talking about its gross domestic product, or GDP. This is the total value of all goods and services the country produces within a certain period, typically a year. So, if you were to add up the value of every car, every iPhone, every haircut, every doctor's visit, and every other good or service produced in a country for a year, you'd have its GDP. Now, currency strength is a different beast altogether. It's determined by foreign exchange markets, where currencies are bought and sold like any other commodity. Here, the law of supply and demand reigns supreme. If a lot of people want to buy a particular currency, its value goes up. If not many people want it, its value goes down. So when we say the Kuwaiti dinar is the strongest currency, we mean that it's in high demand on the foreign exchange market. Now you might be thinking, but surely these two things are related, right? And you'd be correct. A country's economic health, as represented by its GDP, can influence how much demand there is for its currency. But they're not the same thing. A country can have a high GDP and a weak currency if, for example, it has a lot of debt or political instability that makes people wary of buying its currency. Conversely, a country can have a strong currency and a low GDP if it has a small economy but is seen as a safe place to invest money. Now that we've established the difference between wealth and currency strength, let's look at Kuwait's economy. We'll see that while its currency is indeed strong, its wealth, as measured by GDP, doesn't quite measure up to some of the world's richest countries. But that's a story for the next scene. Stay tuned. Kuwait's economy, like many in the Middle East, is heavily dependent on oil. This small, oil-rich country holds about 7% of the world's oil reserves, a significant number considering its size. This abundance of black gold has been a key driver of Kuwait's economy, contributing to the strength of its currency, the Kuwaiti dinar, which currently holds the title of the world's strongest currency. However, as impressive as that may sound, the economy's reliance on oil is a double-edged sword. While oil revenues have fueled Kuwait's economy, they've also made it susceptible to the unpredictable ebb and flow of global oil prices. When oil prices soar, Kuwait's economy thrives, but when they plummet, the economy takes a hit. This lack of diversity in its economic structure can spell vulnerability. This is where Kuwait diverges from the world's wealthiest countries. Let's take a look at the United States, for instance. Yes, it's rich in natural resources, including oil, but it's not solely dependent on them. The US economy is a diverse mix of sectors such as technology, finance, manufacturing, and services. This diversity buffers it from the shocks of fluctuating commodity prices, providing a level of economic stability that Kuwait, with its oil-centric economy, doesn't have. Even within the Middle East, there are examples of countries that have made significant strides in diversifying their economies. The United Arab Emirates, for instance, has a vibrant tourism sector, a thriving real estate market, and a burgeoning tech industry. This economic diversification has given it a degree of resilience that Kuwait is still striving to achieve. So while the strength of Kuwait's currency is undeniable, it's important to understand that a strong currency does not necessarily indicate a robust economy. It's the diversity and resilience of an economy that truly signal wealth. And in that aspect, Kuwait still has ground to cover. So while Kuwait's currency is strong, its economy isn't as robust or diversified as those of the world's richest countries. As we've seen, having the world's strongest currency doesn't necessarily make a country the richest. But why is that so? Let's take a moment to delve deeper into this economic conundrum. Just to recap, wealth and currency strength are not synonymous. Wealth refers to the total value of all assets within a country, including natural resources, human capital, and infrastructure. Currency strength, on the other hand, is determined by various factors such as interest rates, inflation, and geopolitical stability. Think about it this way. A country might have a strong currency because it has high interest rates, attracting foreign investors who want a good return on their money. But this doesn't necessarily mean the country itself is wealthy. It might lack natural resources or have a poorly educated workforce or suffer from political instability. Now let's revisit the case of Kuwait, the country with the world's strongest currency. Yes, it's true that Kuwait has a lot of oil, which certainly contributes to its strong currency, but it's also true that Kuwait's economy is heavily dependent on this single resource. This means it's vulnerable to fluctuations in oil prices, which can have a major impact on its economy. Furthermore, Kuwait faces challenges in terms of developing a diversified and sustainable economy. It's grappling with issues such as high unemployment rates among its young population and the need to develop sectors outside of oil and gas. So while Kuwait's strong currency is certainly a feather in its cap, it doesn't necessarily equate to overall wealth or economic stability. This is why it's so important to think critically about economic indicators. They can provide valuable insights, but they don't tell the whole story. They're like pieces of a puzzle, each one important but only part of a larger picture. Remember, a strong currency is just one aspect of a country's economic health. It doesn't tell the whole story. Thanks for watching, and don't forget to subscribe for more insightful content.